Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Today, let us discuss about the journal entries using the modern approach. In my previous video, we have discussed about this journal entries using the traditional approach and what is the concept of journal entry, debit and credit using traditional approach, rules and the items, and we have solved one of the question also. So if you have not watched the video, watch previous videos and basic accounting video also to get complete details about the accounting. Now let us understand modern approach. Under modern approach, we'll use, you can remember the rule by remembering this word easily, dealer. Here D stands for drawing or dividend, E expenses, A assets, L liability, E equity or capital, or revenue or income. You all know the accounts, the entry will always have a two effect. The one effect will be debit effect or credit effect. And always the debit balance is equals to the credit balance. How we are recording this is, see, here debit balance covers expenses, losses, assets. Any increase in this will be debited, any decrease will be credited. Credit balance, if you take, any increase in this revenue, gain or liability will be credited, any decrease will be debited. If you take any account, you will have a left hand side and right hand side, it will be in the T shape. Right. So always our LHS is equal to RHS. Now we'll understand what is drawings or dividend. See, when the owner invested, when start his business, he invests capital into the business, a cash into business, that is called as capital. Okay. When the owner withdraws money or anything for the personal purpose, that is called as drawings. When he invests the cash or anything in the business is called as capital, and when he withdraws business money for personal purpose, it is called as drawings. In accounting concept, we have one of the concept called accounting concept. Accounting concept, that is business entity concept, says owner and the business are not same, they are different. Now we will understand what is equity or capital. See, when you have a single owner or a very less owners, you will call it as capital. The capital is invested by the few persons only. But when it comes to a company or joint stock company, the units of money they will collect. The units of money which they have collected is called shares. Through shares only they will collect money. Who are all invested money, they are called as shareholders. Okay, now they have invested in the company, they need a return for the investment, so the shareholders will get a return from the company in the form of dividend. Dividend is a part of the profit. Dividend is a part of the profit. After declaring or after deducting all the taxes, appropriations, obligations, everything, then you will declare a dividend from the remaining profit. In equity, we have two types. Shares, we have two types, that is equity share, preference shares. Both will be shown under the head equity. Now here you can see the rule of debit and credit under the modern approach. See, all the dealer, drawing, expenses, asset, liability, equity, revenue, these are the 6 categories. Under these 6 categories only, all other activities or items will fall. So you need to identify first which category the particular item is coming. Based on that, you are applying the rule. Here we are applying the rule of increase or decrease. If you take drawings, if it is increasing, you are debiting. If it is decreasing, you are crediting. Expenses, increasing, you are debiting. Decreasing, you are crediting. Assets, increase, you are debiting. Decrease, you are crediting. Liability, increase, you are crediting. Decrease, you are debiting. Equity, increase, you are crediting. Decrease, you are debiting. Revenue, any increases, you are crediting, and any decreases, you are debiting. How the increase and decrease will be identified, and just we'll understand the meanings of these expenses, assets, liability. equity and revenue for our understanding. We have discussed in detail in our basic accounting video. If you have not watched, kindly watch that video. Now we'll understand what is asset. Asset andre ಆಸ್ತಿ. ಈ ಬಿಸ್ನೆಸ್ ಅಲ್ಲಿ ಮೊದಲು ನಮ್ಮ ಸ್ವಂತದ್ದು ಏನಿತ್ತು ಬಿಸ್ನೆಸ್ಗೆ ಸಂಬಂಧಪಟ್ಟದ್ದು, ಬಿಸ್ನೆಸ್ ನಲ್ಲೇ ಇರುವಂತದ್ದು ಏನಿತ್ತು ಅದನ್ನ ಮಾತ್ರ ನಾವು ಅಸೆಟ್ಸ್ ಅಂತ ಕರಿತಿದ್ವಿ. ಬಟ್ ನೌ ದ ಡೆಫಿನೇಷನ್ ಹ್ಯಾಸ್ ಬಿನ್ ರೀಡಿಫೈನ್ಡ್. So whatever you have controlled, that will be considered as an your asset. And any asset, what we are expecting, the economic benefit in the future. The entity will expect economic benefits. Now I am purchasing any machinery means what is the purpose, the main objective or goal of my machinery purchased is I can use the machinery in the production activities, then I'll get a return from that by selling it, right? So that is my economic benefit in the future. Okay, that is assets. Expenses is, the expenses are I'm spending for the revenue generating purpose. Okay, by spending the expenses I am generating revenue from that, but once I spend there will be no further benefit from that expenses. Example, rent, electricity, salary. See, whatever the services or they have rendered, for that you have paid. Now they won't carry forward whatever you have paid currently for the future one. So again, if you want to receive some services means you need to pay it again. Okay, so that is called expenses. Then liability. Liability are the obligations, the present obligations which are creating and by affecting the past events. And the outsiders, the liabilities, obligation, they can climb on the total asset. They have all right to climb on the assets because you have promised. You are not going to pay today, but tomorrow surely you will pay. If you are not paid tomorrow, then they can climb on your assets because this is an obligation for your business. Okay, so equity and capital we have understood. The next one is revenue. Revenue means the cash inflow. Cash inflow, whatever the business rise through the business by selling goods or rendering services, but it is a gross amount, not the net amount. Okay, so that is revenue. Now let us understand by solving the question. Journalize the following transaction in the books of Miss Beauty Traders. Date, particulars, amount. August 2023. First, started business with cash 2 lakh. Second, bought office furniture 30,000. Third, paid into bank 1 lakh. Fifth, purchased a computer 2 lakh 50. Sixth, bought goods on credit from Sita 60,000. 8, cash sale 30. 9, sold goods to Ramu on credit 25,000. 14, goods returned to Sita 2,000. 15, paid wages 1,000. 18, goods returned by Ramu 2,000. 22nd, cash received from Ramu 15,000. 26, check received from Ramu 8,000. 28, rent paid 3,000. 30th, cash sale 14,000. So these are the transactions of Miss Beauty Traders for the month of August. Now before journalizing this transaction, you are recording in the books of journal. That is, once you record, it is called journal book. The transactions you have entered is called journalizing the transaction, and once you pass the entry is called journal entry. Okay, we have techniques. Here you need to first analyze the transaction because all the transactions will not be considered as a business transaction. The transaction should be in a financial character in nature. Then money or money's worth should be there. Then only you need to understand that it is a accounting transaction. Then you need to identify at least 2 accounts because every account will have a 2 effect, the debit effect and credit effect. So you need to identify 2 accounts involved and find in which category each of them falls in. I have showed 6 categories, no, under which category, because that rule you are applying over here, and you need to check it out, increase or decrease in that account, because the rule we are applying by seeing whether it is increase or decrease, then we can use the rule. So this is the format of journal. Date, particulars, ledger folio, debit amount column, credit amount column. Here you can see date, you are recording all the dates because journal we are recorded in a chronological order. This is called primary book of account and virginal entries. So that's why it can be used as an evidence in the court. Okay, particulars, you are recording which account you are debiting, which account you are crediting, the details of debit and credit. And narration is the explanation for the entry. Ledger folio, once you have recorded in the journal, this is the primary work, the process. Under process of accounting, the first work starts with the journal only. After recording in journal, then you are posting to rest other accounts. So once you post to the respective account, that particular account, concerned account, page number you are recording under journal for easy finding purpose. Okay, debit amount column, credit amount column. Always the debit is equals to the credit. Now we'll pass the entries. So what is the first transaction? Started business with cash. So this involves a financial character we have analyzed. Now two accounts, whether two accounts is involved in this transaction, so that we will check it out. So here started business with cash. Cash they have brought into business. Whatever the cash they are bringing into business, it is called as capital. So we have identified there two accounts are there. Now we'll check it out under which account these are falling. See, cash is falling under the category of asset. So cash is coming into the business. Cash is increasing, right? Cash is increased. So we are debiting cash. And capital is falling under equity. Equity or capital, right? Equity or capital. So it is falling under equity. Here capital is also increasing because he brought cash in the form of capital. So cash account we are, capital account we are crediting. Okay. So entry is cash account data 2023 August 1st, cash account data to capital account. Capital account amount is 2 lakh and the narration is always narration starts with being started business with cash. Started business with cash. With cash. So this is the first transaction. The next transaction is bought office furniture 30,000. So here the two accounts are affecting is furniture we have brought. How we will get furniture? Furnitures will get by paying cash. They won't give it free of cost, right? So either today or tomorrow we need to pay cash. Now we paid cash here immediately after purchasing. Furniture is an asset to the business. Furniture is an asset. Cash is also an asset. But here furniture is coming in. Furnitures are coming in. Earlier you had one chair. You have purchased another 2 chairs, 4 tables and all. So it is 4. 4 plus 1, 5. Increasing. Cash is to purchase this 5, you paid a cash. So your cash is decreased. You had 100 rupees, you paid 50, means the 50 is remaining. So it is decreased, right? So decrease in the cash. So what is the rule? Asset increase. Which account is increasing? Furniture account is increasing. So furniture account you are debiting and cash account you are crediting. So now we'll pass an entry. So which account we are debiting? Furniture account we are debiting. Furniture account data to cash account. Cash account date is 2nd, amount is 30,000. Being furniture purchased. Being furniture purchased. Okay. So next transaction is on 3rd. That is paid into bank. Here paid into bank. So bank also coming under asset account. bank to cash. Okay. You paid cash, you deposited cash into the bank. Your bank account was nil before. Now the account has been increased. Your cash decreased. The two account we have identified, that is bank and cash. Here both are falling under the category of asset. Bank is increasing, so we are debiting the bank account, and cash is decreasing, so we are crediting the cash account. Entry on third, bank account debtor to cash account. Cash account amount is 1 lakh. 1 lakh being cash deposited. Always narration you should start with being cash deposited into bank or deposited into bank. To bank. What is the next transaction? Next transaction is on 5th. Purchased a computer, like same effect like furniture purchased. So here computers you have purchased by paying the cash. Okay, so computers are increased. One asset is increased, another asset is decreased. Cash will come under the current assets and computers will come under the fixed assets. Okay, subheading those are. Now the entry is on 5th. Computers account debtor. Computers account debtor to cash account. Cash account amount is 2,50,000. 2,50,000 being computers purchased. Computers purchased. Okay. The next transaction is on 6th. Here, bought goods on credit from Sita, 60,000. Okay. Here, bought goods, see credit, if they have not mentioned the credit, then when they have mentioned name of the supplier, then we will consider this as a credit transaction. Credit transaction means you are not making the payment immediately after the purchase. So here the goods are coming in. Goods are coming in. Goods are falling under which category? Assets category. Goods increased. Okay. But you didn't pay cash to this goods. You have created an obligation, promise to Sita you are going to pay later. So Sita is your liability. Sita is your liability, right? So what is the entry here? Asset increased, we are debiting. Liability also we have created the creditor. Sita is our creditor, so we are increased. We crediting the Sita account. Crediting Sita account. 6th, purchases account debtor. Purchase account debtor to Sita account. Amount is 60,000. Being goods purchased on credit or goods purchased from Sita. Being goods purchased on credit. On credit. Okay. Next transaction is on 8th. Cash sales. So here cash sales. You sold some goods. Okay. So goods are going out of the business. It is reduced and goods went out and it brought cash into the business. So cash is increased. Goods decreased. Why goods decreased? Because we sold goods. So how we are passing this entry here? Both are falling under asset only. Cash increased because I sold goods. So cash account we are debiting and sales account we are crediting. Okay. Cash account debtor to sales account. Sales account amount is 30,000 date on 8th. Right. Being goods sold. Being goods sold. Now the next transaction is on 9th. Sold goods to Ramu on credit. So here we have sold goods. When we sold goods, goods are going out. And but we didn't receive cash for this immediately, but later he is paying. So he is called as debtor, our customer. Okay. He wants money to the business. Okay. He is obligated to the business. So debtors are also coming under the asset only because he is paying amount later, no? So that's why he's coming under debtors only. Assets. So here we sold goods. Goods are going out. Ramu is paying us later. He is not paid at present. So we are debiting the Ramu account and we are crediting the sales account. Okay, understood this one? Here we are debiting Ramu account because Ramu is going to pay us later. He has created name called debtors. He owns money to the business. So increased money debtors we are debiting and we are crediting sales account. So entry is on 9th. On 9th, Ramu account debtor. Ramu account debtor to sales account. Sales account being goods sold to Ramu. Sold to Ramu. Amount is good 25,000. 25,000. Okay. Next entry is on 14th. Goods returned to Sita 2000. See here previously we have purchased goods from Sita. Purchase account debtor to Sita account. So when we purchase, we debited. Now we have returned. When we return, the goods is reduced, right? It is called purchase returns account. And to Sita, we have returned. We are supposed to pay 60,000. In that, 2,000 has been reduced now. So what we are doing? Purchase returns account, we are crediting because assets are decreasing, and liability account we are debiting 2,000 again, that is also decreasing. Okay, understood this? Here see, purchase account you have debited when goods were coming in. Now purchase return is going out. Okay, so because of defect or damage we are returning. So now the number has been reduced. So purchase returns account we are crediting. Sita account we are debiting. Okay, we'll pass entry. Sita account debtor to purchase returns account. Purchase returns account 2,000 being goods returned to Sita. Goods returned to Sita. Okay, so the next entry is on 15th. Paid wages. Paid wages. Wages is an expense to the business. So what we are recording here, see, expenses. Wages created. Now you are paying. It's increased. So you are debiting. And how you are paying wages? By cash we are paying wages. So cash is decreasing. So cash account we are crediting. Okay. Entry is on 15th. So it's 14th. On 15th. Wages account debtor to cash account. Cash account amount is 1,000 being wages paid. Wages paid or paid wages. You can write Next transaction is on 18th. That is goods returned by Ramu. So we sold. For that we have received now from Ramu. Here you can see the entry. We have passed previously Ramu account data to sales account. This is we sold goods to Ramu. Ramu is paying amount for that later. Okay. Now before paying amount he has returned some goods due to damage or defect. So for that entry we are passing now. Whatever we sold is returning. So it is sales return we are debiting. So goods are coming back. The goods is increasing in the storeroom, right? So that's why it is sales return account data to Ramu account. So 2000 is not going to pay us. Sales return account data, the entry 18 sales returns account data to Ramu account. Ramu account 2000 being goods returned from Ramu. Ramu. Okay. The next transaction is on 22nd. Cash received from Ramu 15,000 and again on 26th check received from Ramu 8,000 is there. So here you can see Ramu we sold goods worth of 25,000. Okay, out of this 25,000 Ramu returned 2,000. So how much, what is the balance? Remaining balance was 23,000. 23,000. Now he is paying first in cash on 22nd transaction, that is 15,000 is paying. 8,000 is the remaining balance that is paying through check. Right. Now we'll pass entry for this transactions. Okay. Now on 22nd we are receiving cash from Ramu. So cash is asset increasing. So debit, we are debiting the cash account and Ramu account we are crediting. Ramu is a debtor. Now we debited when he was created, supposed to pay. Now he is paying. So the amount which is going to pay is reduced, right? So that's why we are crediting Ramu account. It is decreasing. Okay. Cash account debtor to Ramu account. Ramu account is 15,000 being cash received from Ramu. Cash received from Ramu. Next transaction is on 26th. That is check received from Ramu. Bank is also an asset. Our bank balance is increasing. So we are debiting bank account. Bank account debtor to Ramu account. Ramu account 8,000. 8,000. Right. Being check received from Ramu. Check received from Ramu. Now, how many times you have credited Ramu? Here 8,000. Here 15,000. 8 plus 15, 23. Here 2,000, 25,000. The amount Ramu which you have credited is 25,000 and equally you have debited. So your debit is equals to credit, right? Here 25,000 Ramu debit, here 8,000 credit, 15,000 credit, 2,000 credit. 2 plus 15 plus 8 is 25,000, right? His account is closed. Now the next transaction is on 28th, rent paid. Rent is an expense. Rent is an expense. So we are debiting rent account debtor To cash account, I'm paying rent through cash, right? 3000 is the amount. Being rent paid. Being rent paid. The last transaction of the month August is cash sales. Cash sales on 13 August. Cash sale is when we sold goods on cash, we are receiving cash, right? So cash account is increasing. Why we are debiting cash? Because cash is coming under asset. It is increasing cash. That's why we are debiting cash. And two, sales account we are crediting because the goods are going out in the form of sale. Goods are getting declined. So that's why we are crediting sales account. Amount is 14,000. Being goods sold on cash or cash sales on cash. Cash account data to sales account being goods sold on cash. So we have passed all the entries. That is, account is the most easiest subject, and if you understand journal, the rest of the accounts are just a piece of cake for you. So that's why understand the concept of journal. If you go any higher studies, the rule will be same. Okay, just try to remember the rule, understand the concept, then apply the logic. So happy learning. Thank you for watching. Have a nice day. If you are not yet subscribed, kindly subscribe the channel. Press bell icon to receive updates. Thank you. See you in next video. Have a nice day.